70% of Berkshire Hathaway's entire portfolio is sitting in just 5 stocks. This just happened, and most investors don't realize what it means yet. Here's what's really going on and what you should be thinking about right now. The S&P 500 just closed above 7,400 for the first time in history. That's not a milestone, that's a warning light. Warren Buffett is sounding the alarm. Analysts are calling it a stark warning. The Oracle of Omaha is signaling that valuations are stretched and risk is elevated right now. Berkshire Hathaway is sitting on a record cash pile. Buffett isn't deploying it. That silence is louder than any press release. 70% of Berkshire's entire equity portfolio is concentrated in just 5 positions. Apple, American Express, Bank of America, Coca-Cola, Chevron. That's not diversification. That's a deliberate, high-conviction bet. And here's what hits close to home. If the world's most famous long-term bull is holding cash instead of buying at S&P 7,400, what does that tell you about where prices are right now? Buffett's own valuation benchmark, the ratio of total market cap to US GDP, is flashing levels not seen since the dot-com peak. That's not a coincidence. That's a pattern. But here's what nobody is saying about this yet. The mainstream narrative is fixating on Buffett's cash position as bearish. But look deeper. His 70% concentration in 5 stocks tells a completely different story. He's not paralyzed by fear. He's being brutally selective. He's not selling America. He's selling the idea that everything is worth buying right now. That distinction? Most retail investors are completely missing it. Buffett isn't predicting a crash. He's practicing what he's preached for 60 years. Extreme patience, extreme discipline, and zero tolerance for overpaying. The danger in 2026 isn't panic, it's complacency. First, audit your concentration. If more than 50% of your portfolio is in fewer than 5 positions, you're running Berkshire-level concentration without Berkshire-level research. Second, examine your cash position. Buffett's elevated cash isn't just defensive, it's optionality. Dry powder for when real value appears. Are you positioned to act when prices reset? Third, check your entry prices against fundamentals, not momentum. At S&P 7,400 plus, the margin of safety has thinned dramatically. Know what you own and why you own it at today's prices. Buffett is telling you something, not with words, but with where he's putting his money and where he's choosing not to. What do you think this means for your portfolio? Drop it below. This video is for educational purposes only, not financial advice. Always consult a qualified advisor.